If any of these images hit close to home, you don't need to worry about unrealized capital gains tax. But Republican talking heads are freaking out so that you freak out. So let's back up. Unrealized capital gains are basically the profits you would make if you sold an asset like stock. But because you haven't sold it yet, it's just the potential profit, or unrealized. Currently, those aren't taxed. They can only be taxed once a sale has been made. And the Harris campaign has recently said that it supports a tax on those profits, but with two major caveats that are conveniently left out of right-wing attacks. Number one, the tax would only apply to individuals with at least $100 million in wealth who do not pay at least 25% tax rate on their income. Number two, even if you were in that Richie Rich club, you would only be taxed if at least 80% of your wealth was in tradable assets like stocks, bonds, etc. To be clear, this doesn't even affect the top 1%. We're talking about the top 0.01% of taxpayers, the elite of the elite. So why are people freaking out? Well, first, take a look at who is talking. The ones saying the most about how this would affect you are the major billionaires and venture capitalists who would actually be affected. Second, it's because this targets an age-old strategy for the wealthy, popularly known as buy, borrow, die. It's basically a way to, one, accumulate more wealth by borrowing against unrealized assets, and two, keep generational wealth by passing it down to heirs with reduced taxes. Now look, it might seem weird to tax something that's potential profit, but consider this. Billionaires do use unrealized capital gains as leverage in other business dealings. So the question is, if there's value in one instance, why not in another? It's definitely a different debate and something for accountants for the 1% to figure out, and again, not something that would make you pay up.